Is now a good time to buy into the stock market? It's a very common question, but it's often misguided. It's a speculator question, not a long-term investor question. We ask it because we feel like there must be some better times than others. And here's the truth, it's actually correct. Expected return on your stocks is not the same in every period. When valuations are high, like now, expected returns are usually lower. When valuations are low, like after a crash, expected returns are usually higher. But that's a crucial distinction that everyone misses. Lower doesn't mean negative. You always expect some return from owning stocks. In fact, that's what you're being paid as a compensation for the risk you're taking. So every day you're sitting in cash, you're missing out on that potential return. What intelligent investors do is wait in whether the risk is worth the return and allocate accordingly. That may mean owning more or less equities depending on the period, but very rarely all in or zero. In fact, it makes also a lot of sense to be invested always the same because the equity risk premium is still fairly stable most of the time. And in any case, estimating the expected return of stocks is more art than science. Being invested over as many days as possible minimizes the risk of a bad sequence of return.